The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the November 15th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 ship, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. And I do want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. Would love to hear from you at 877-927-6648. Now, if you can't call in, but you've got a question, I'd love to hear from you that way, too. You can send me an email. Send it to steve@tfnn.com. Send it early. And in the subject heading, if you'd be kind enough to put radio show question. Of course, if you're inside the Tiger's Den, well, any and every ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got all the U.S. indices trading to the upside. The Dow's up 263 points. That's about 0.8%. 1 4/10 for the S&P, or 55 points. A little over 2% for the NASDAQ 100. 252 points. 2% for the Russell. 37 points. The semi's up 3.5%. That's 94 points. The trend is up 1 1/4. 183 points that way. Leading the charge dollar-wise, the upside, Mercado Libre up $64, nearly 7%. Asima Holdings up $21, 3.5%. SVB Financial $20, 9%. ServiceNow $20, 5%. Monolithic Power Systems $16, 4%. The Shakers, Albemarle down $27, nearly 9%. Regeneron Pharmaceuticals off $12, 1 6/10%. Humana off $9, 1 7/10%. Elephants Health down 8%. I'm sorry, $8, about 1 6/10%. McKesson is down $7. That healthcare sector seems like getting pretty hit, but still the sector overall is still to the upside out there. McKesson is down $7. That's about 2% to the downside. So where do we want to begin? I tell you where we're going to begin. We're going to begin by taking a look at the Dow. Let's try to rip this apart here. I didn't catch Basil's show. I know he usually rips apart the Dow here, so but I think we just have to start there. Why do we have to start there, Steve? Oh, excellent question. The reason I want to start here is because here are three charts. The Dow Jones Industrial Indice, that's in your left-hand panel. The Dow, these are daily time frames, by the way. The daily chart for the Dow Equity Future Contract, that's dead center. And then the ETF for the index ETF, that is the Dow Diamonds. Now, what you'll notice here, you'll see each of these have Rhodes Momentum Indicator signals that have been triggered. Those are the black diagonal lines. In order for that pattern to confirm, and I like to teach, this is a great pattern. If you don't know it, you want to learn it, just subscribe to Mastering Probability. I don't care if you only do it for 29 days. It doesn't cost you anything. Just do it. It's going to assist you in all of your trading. I don't care what time frame it is. Here, let's focus in on the daily time frame, because those are the charts we've got up on our screen. The way that the signal gets confirmed, one of the pieces is you've got to get a bearish reversal candle. That is how the cavalry, bulls and bears, are clocking each day at 9:30 to start that cash index. That is their deal. They need to send us not smoke signals, real signals. And you had that bearish shooting star candle yesterday. So, in effect, we've got a confirmed Rhodes Momentum Indicator top that only gets negated with a close above yesterday's high in the Dow. That's at 33,964.30. Now, we've poked our head, or the price has poked its head above that level today. Not a big deal there. Actually, today, right now, if this were to close, you'd have another bearish shooting star candle. Does one shooting star or two shooting stars better than one shooting star? It is if you're viewing shooting stars, but I don't know so on a stock chart. out there. So you've got a top that's in place. We know where it gets negated. That would suggest price moves higher. Short of that, what price should do is move down and test that oscillator and change line, currently printing a 33,141 level. That's not where the price test will take place, but that's right now the target area. If we look at the Dow Equity Future Contract, well, it did the same thing. I did hear the very end of Basil's show, and he mentioned I use a small portion of his toolbox, and that portion is wave number 7. That is letter G. So coming off of the lows out here for the Dow Equity Future Contract, what price has done, it has gotten to wave number 7. Now that extends itself until you get a lower high out there. But that's one top. But yesterday also generated a bearish shooting star candle, which in fact confirmed a Rhodes momentum indicator top. This suggests that price should pull back and retrace back to the 33,155-ish area. I do use 33,026 as the real area where a test could or should unfold. That's the top of the white background daily chart profile, task profile for the Dow Equity Future Contract. And not to be left out, you've got that Dow Diamond chart. Yesterday also generating a confirmed Rhodes momentum indicator top. That would be negated with the close above yesterday's high. Yesterday's high is 339.87. So the Dow on its daily charts for all three of these vehicles have topping patterns are in place and suggest that the market should pull back to their oscillator and change lines. So what else can we take a look at for the Dow? For the Dow, we can go take a look at, we'll change screens here. I'm going to change to the black background screen. And for the Dow, we can go take a look at the, we've got three different time frames here. The very left is the monthly time frame. The red horizontal lines are the primary trading range boundary levels. So in the case of the monthly chart, price has found support at a primary trading range boundary level. That was at the 28,699 area. Price above the next level, which is 32,359. Its message is that it wants to go target 36,020. That's what a target is. No, it's a monthly chart. So that just says over time. The weekly chart, which is in the center panel here, we can see price broke above its descending price channel, above its descending trend line, and that looks good. This suggests that price might want to make a move up to the 34,152 area. The daily chart, which is really what we were focused on earlier, we took a look at the Dow Cash Index, and we took, whoa, what the heck? That just got a little too crowded. Give me a moment here to try to adjust this chart. See what we've got here. Sorry about that, folks. Was not prepared for that. So we got that. Let's try this. That sort of cleared it up. Give me a moment here. Check out. Whoa, what did I do there? What did I do? Daily time frame. Daily time. My apology, folks. It's normally not this much of a trouble. Not this much trouble, but it is right now. And why, I don't know. Try one more thing here. Dynamic. Nope, that's not going to work. Okay, so you know what? I don't want to focus on the daily chart here right now. There may be something that I've got here that's screwed up on the horizontal trading ranges out there. So, so I can't go there. So sorry about that. I do know something that I can share with you. How many of you believe that the Dow is in a bear market? Those of you listening in. How many believe the Dow is in a bear market? Go ahead, raise your hands. I can see right through my screen out here. And there's several that say that the Dow is in a bear market. When we come back from this break, let's go find out if it is. Steve Rhodes with TFNN. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So I started pulling out these charts late last night while I was watching the football game. The Philadelphia against the Redskins. I can't call them the Commanders. That just is a weird name. At least it's weird for Stevie. But in any event, what shouldn't have been a very good game turned out to be an incredibly good game, with the exception of some. I've never seen so many botched calls on both sides out there, which is really crazy, right? They've got the instant replay stuff, and some can be taken a look at, some others can't be taken a look at, and yet we're watching those plays in slow motion in real time, and you just wish you didn't have that out there. But in any event, as I was watching that game, my system's been acting slow, so I had to close out a bunch of the black background charts because it was just hogging up too much of the system out there. And some of the charts that I went ahead and closed out because it takes a lot of time for calculations is the instruments priced in other major currencies. Thank you, Duffy. So at the lowest point in the Dow's move lower so far, it was off 21.7%. Thank you. I didn't know what the actual percentage was. So that really qualified, at least at that stage, to say that it was in a bear market territory based upon the kind of the accepted norm of what's out there. But this chart here, what I want to show you, where I want you to focus, is not where we're at today. I just want to go a little bit of a history lesson. So you're looking at the green arrow or the red arrows on each of these charts. So left-hand panel, as you can see, is the Dow priced in U.S. dollars. Next to that, Dow priced in euros. Next to that, Dow priced in yen. Next to that, Dow priced in pounds out here. So what do we know? When markets are going to move lower in any instrument, they really need to move lower in all currencies out here. So if you take a look at just simply coming down, what I'm showing you here, where those arrows are, they are representative of the point in time when the Dow topped in U.S. dollars. And you can see that all markets moved lower. Doesn't matter whether it was priced in. Now, the least move lower was the Dow priced in pounds, but nonetheless, it was still moving lower in concert with all of the other instruments out there. Now, this is a monthly time frame that we're looking at. Now I'm going to take it to the daily or to the weekly time frame. And here's the weekly time frame, basically of those same instruments. So if we take a look at, and I will come back to the one on the very left, the Dow price in dollars. I want to start here on the very right-hand side. So let's read right to left. If we take a look at what took place last week, that's the Dow price in pounds. Last week, so first of all, by the way, the yellow horizontal lines here and those price points that are measured, that is tying out to the exact weekly high. So I'm using an exact, in essence, swing point. That's tied out to that exact weekly high. So what you'll notice here is that the Dow price in euros, pounds, and yen is basically above that. In euros, it's just slightly below right now, but pretty much right at about that area. Last week, so what's different about 2007 versus right now? Well, there's a huge difference. In 2007, the Dow was moving lower in all the major currencies. Dollar, pound, yen, euros out there. In 2022, that is not the case at all. Last week, the Dow made a new all-time high priced in pounds. 2 weeks before that, the Dow made a new all-time high priced in yen. So no bear markets there for sure. Nothing but bull. That ain't no bull. That's the reality. And if we take a look at the Dow priced in euros, now it made its all-time high based in August out here, still well after the high that came in priced in dollars, which was in January out there. So in order for there to really be, so this is really when I looked at this last night, I was like, God, why did I ever close this out? Because I had stopped taking a look at it. And the reason is, so this is clear. You go back, you can study this yourselves out there. But when instruments top, specifically the Dow, but when instruments top in all the major currencies, they'll do it at the same time. We just took a look at that on that monthly chart that we looked at out there. The price point that I had identified, that was the top at that stage out there. Prices moved lower. We don't have that right now. What is this telling us? So the dipsters, if you're wondering who they are, if you're trading the Dow in yen, and you're trading the Dow in pounds, and you're trading the Dow in euros, they're all dipster buyers out there. At least that's what we say. That's what I'm saying when we take a look at how the Dow is priced. So we come back to these markets, but the answer to the question is the Dow in a bear market. The answer is going to be this is so different than the patterns that we looked at in 2007. The answer is absolutely, positively not. Certainly not at this stage here. So now let's go to some of our questions that have come in. And Fletch, we'll get to your question about Uber after I get to the question that came in from Larry, who wants to take a look at Boyle. Larry's been looking at Boyle and is looking for an entry point. Now, in the case of Boyle, let's pull this chart up here. Always important to understand what is inside the ETF that you are trading. So if we take a look at this here, this is Boyle is the Ultra Bloomberg natural gas out here. And what we can see as of the close yesterday, November 14th out here, the entire holding inside of Boyle, Larry, is the January 2023 future contract. So whereas the December is still trading out there, I've gone ahead and changed all my charts to January. So we take a look at this, and we're going to roll here early next week anyway. So now we have that established. It's really Boyle is basically trading the January natural gas futures contract. So let's go ahead and let's take a look and switch our charts over to the black background charts. Let's do this here. I'm sorry, the white background charts. Let's take a look at natural gas. What is it doing? So on a monthly time frame, you've got a confirmed Rhodes Momentum Indicator top. Price is consolidating with inside its monthly profile. It's below the top of the box, 668. It's below its oscillator and change line. So this says, Larry, we have to be aware that over the long haul, natural gas may want to pull back to 484. Now, I'd say caution on whether that's going to happen. Why? Well, because on the weekly time frame chart, what natural gas did, the January 2023 contract did, was it formed a TD9 count bottom. It did it on bar number 8. That was a few weeks ago. Now, what happened last week, Larry, is price got up to that green oscillator and change line, tested and rejected that. That's not so much bearish. It just says the consolidation continues. So where's one area that you could take a look at putting a long position into Boyle, which you do based upon where natural gas is trading, and that would be at $6.03. 603 is the bottom of that new weekly profile that formed a couple of weeks ago. On a daily time frame, there's an A to B equals CD pattern out here that was confirmed with this key reversal bar that formed on October 24th. So you've got a bottom on the daily, you've got a bottom on the weekly. Maybe the work is really done on the monthly chart, because what price did was it got back 2 months ago the month of October, 1 month ago. It got back, in essence, got into the bullish structured support level on a monthly basis. So that's a successful test of support. When you get tops, that's really what you're looking for. Can it bust through support? And on a monthly basis, the answer was no. So the weekly's got a confirmed by the deep point pattern. The daily has a confirmed TD9 count. The daily has a confirmed by the deep point. And so the question is, will price get below the red oscillator and change that? So you may want to ladder into a position here, Larry, into Boyle. If we take a look at the last 4 or 5 trading sessions, what the daily time frame has done is gotten back to its red oscillator and change line. It has found support there. That's at 617 right now. Today's low out here was at 619. And so that could be an area. Another level be 599, the bottom of the daily profile. Those are what you'd be looking for. We come back to this break. We'll finish take a look at the a natural gas contract for Larry, who's looking to get into a long position.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So back to those natural gas charts out here. We'll just take a look at the 30-minute time frame chart. And on a 30-minute chart out here, Larry, the one thing that's really missing from, saying, hey, blaring at you, go take a long position here, what we've got is a series of lower highs out here. And, so it's somewhat suspect. Now, on a 30-minute time frame out here, it looks like you might have had an A to B equals C. Look, where price found support is at a breakout level of $6.22. What price has not been able to do is bust out of its profile. It did test it as we came into the 11:30 slot out here. That was about 20 seconds ago, and that was at $6.36. So on a 30-minute basis, if price can close above that, and that would be a small little win from a bullish standpoint. But I think if you're really looking to build a position inside of Boyle, You can add to a position now or when natural gets back to about 617, 599, 603. Those would be the levels that I would be looking at. And if we take a look at the charts here for Boyle, let's just do that real quickly for you, see if there's anything that sticks out here in Boyle. What does that equate to in Boyle? Well, today's low inside of natural gas, today's low inside of Boyle is 35.33, and you're at 37.09 out here. The signals like on a monthly or weekly basis out there, I think we had a TD9 count bottom inside the January natural gas contract. That's really what you're trading. So the weekly chart that shows up here is, for the most part, as far as the signals, in my opinion, is irrelevant. So even though I can find some profile levels for you here, you're really making that decision based upon the natural gas contract out there. So I hope that helps you out with regard to getting into Boyle. Let's go take a look at Uber out here. Let's get that fired up on our screen. And that is for Fletch inside the Tiger's Den. And let me see if I get back to that. It just says, can you look at Uber long from the 27 area out there? So absolutely. So let's get that fired up. It's taking a few moments here. It's because I've got a couple of other applications running in the background. What I can share with you at this stage here while we're waiting for these white background charts to populate is Uber right now is trading out at the price point of $30.98. Well, I guess we see that. So what is it doing? It's taking on a swing point from November 1st that did volume of 87 million. You've done 13 million shares. That's the swing point right here. That's labeled D. It's done 13 million shares so far, so it doesn't appear that it's going to have the volume. 13 million, 26, 39. We're going against, what did I say, 30? Well, I'll take that back. Hold on. I guess if the same buying pressure continues to unfold here, yeah, you can get up, 87 million. No, not even close. But nonetheless, if price traded above yesterday's high, the day before's high, this is bullish, it's traded above a swing point, even if it's with lighter volume, it still could form an A to B equals CD pattern out there. But here's what we know, Fletch, more than anything else, and that is where's resistance. Price is above profile resistance, but it could be headed back to its TD9 count breakdown area. That's at $32.56 out there. So that's the area to be watching. Now, the low of that candle session was 31.19. The volume was 23 million shares. The high today so far has been 31.28. So it's tested that little swingish type area out there, at least that candle. But nonetheless, it does look to me like on a daily time frame, Uber, whether it's an A to B equals CD or not, it wants to make a run for that 32.56 level. As we look at the weekly time frame chart, well, price is above its weekly profile. It was way back here. When I say way back here, I'm referring to the week of October the 14th, when price went ahead and tested and rejected its bullish structured weekly profile out there. Closed above the top of that profile the following week. This suggests a move up to 34.41. So we've got 32.56 and 34.41. And the monthly time frame chart for Uber not really providing us with a ton of information other than the next resistance level here, Fletch, is up at $38.10. So overall, I think that Uber should continue to move higher today and perhaps close above that swing point. Could be a Tiger A to B equals CD. In other words, closing over a swing point with lighter volume. I'm just looking at the 30-minute time frame chart, and the reason I'm doing that, Duffy, is see if there's any kind of topping signal that's in place here short term, and the answer is there is not. So Uber should continue to move higher. Doesn't have the volume to confirm an A to B equals CD. The upside doesn't mean it won't generate that anyways. And, well, actually, we could use a different A to B equals CD. This swing point had volume here, and I'm looking at the trading day of October 26th of 17 million shares. Now, when that was passed with 35 million shares. So here is a small A to B equals CD pattern. Not that it's really going to change things a whole lot, but let's just draw that in for you. So here's the A to B, and then actually I'm just going to move this over to the C point out here, and that really gets us up to that 32.56 level. So 32.56 is where Uber should head towards, and that was for Fletch inside the Tiger's Den. Now, I don't believe that there's you're welcome, Fletch. I don't believe there is any other questions inside the Tiger's Den that I haven't answered. If there is, would you please repost that, and I'll make sure that I get to it. I'm just going to check to see by email. It's also quiet on the email fronts out there. So no requests that we have on any of the request lines out there. So that says I'll have to take free range until I get a request out there. So free range would be what? What does that say? What should we go take a look at? What should we take a look at? What should we take a look at? So let's go back to, let's do this. Let's go take a look at the NQ out here, because the NQ chart, so we focused on the Dow earlier. And, and that clearly shows that there's a potential top that's in place. We should see a pullback. We get that pullback. That would be the next buy the point, not buy the deep point, but buy the dip area out there. We've proven that the big dogs, that's global capital, is most certainly comfortable with the Dow. It's up at, made new all-time highs in pounds and euros recently within the last week and the week before. So we've got those topping signals on the daily time frame to suggest a retracement. Well, the NQ has a whole different set of charts out there. And is the NQ going to head lower just because the Dow suggests that? I don't know the answer to that question. But if we take a look at the NQ charts here, they're populating as we speak right now. We're on the same white background screens out here. There's really a consolidation pattern that the NQ is in. You can't really draw. You can if you want. I'm suggesting you don't really draw an A to B equals CD because the retracement was an 86% retracement. That doesn't make sense from the A to B equals CD folklore language out there. So this is suggesting that price wants to make its consolidation measured move, which will take it up towards the 12,987 level. If you look at intraday charts out here, there is no topping pattern whatsoever as we speak for the 5-hour time frame chart, nor the 4-hour time frame chart, nor the 2-hour time frame chart, nor the 60-minute time frame chart. The 60-minute price is pulling back to test support. Test support is the bottom of its bullish structured 60-minute profile. That was 11,942 out here. You do have a TD9 count top on the 30-minute chart, which has led to a consolidation. That consolidation is between either 11,909 at the bottom or 11,853. And to the upside, 12,092. No signal on a 15-minute chart, no signal on a 10-minute chart. So the NQ is actually relatively strong out there. So if the NQ is strong, what is Apple doing? Well, let's go take a look and see what Apple is doing. That's a great question. I don't know the answer to that. But let's put that up. And then we finish taking a look at Apple. What we'll do is for Duffy, we'll take a look at First Solar out there. His question is, has it topped? So we'll go take a look at the charts. Let them tell us. So we're just waiting for Apple to populate here. It should just take another moment or so. And as Apple comes online, we can see that price is trading into its bullish structured profile. And that's between a range of 152.15 and 154.83. Price, you're above yesterday's high. No reason for it to not go tackle the 154.83 level out there. The only thing that could get in the way here, this is at 11:38 in the morning. Oops.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we were taking a look at Apple. Apple's chart was suggesting to us that price should make its way up to 154.83. That's the daily top of its bearish structure daily profile. We look over to the 30-minute chart, and what we see out here is that this did form a Rhodes Momentum Indicator topping pattern out here, and it did that at, I believe that was at 11 o'clock? It was 11 o'clock when it formed that little bearish engulfing candle. Remember, when you get a topping pattern out here, it just says price has the price should go back and test support levels. Well, the first support level on the 30-minute time frame was that green oscillator and change line. That's exactly what it did. As we came in at 11:30 session out there, it's been a test and rejection. The price closed above 152.41. As we come to the 12 noon time frame, price will have regained its momentum to the upside. And here's what you'll know: if price closes above the intraday high at 153.59, that'll say off to the races. Now, those races could find or should find resistance at the 154.83 area out there. So that was just taking a look at the NQ, and that led us over to taking a look at the Apple, the number one weighted instrument. I believe it's the number one weighted instrument inside the NDX 100, although I'd have to go back and really confirm that. Doesn't matter at this stage here. We've got a request. So Duffy had asked, has Florida Solar, FSLR, has that topped? So let's pull up the charts here for Florida Solar, FLSR. It's not Florida Solar out there. That's not the right symbol, is it? FSLR. Geez, Louise, Stevie. FSLR, First Solar. There we go. Okay, so First Solar, I'll eventually get there. Thanks, Duff. First Solar right now is trading out at 157.69. It's attempting to get above the top of its daily profile. It has attempted this 3 different times out here, and it has struggled. Now, the question is, has it topped? Well, it has a TD9 count top that formed out here on November 14th. That pattern is still in play. That pattern would remain in play unless price were to close above that high. That would be at 158.48. So you've already got a top that's in place. You also have a Rhodes Momentum Indicator top that is in place. That confirmed on a trading session of November 11. So it is telling us on a daily time frame, whoever asked about First Solar, that was, who was that? John? Nope, that wasn't John. That was Duffy asked about First Solar. So definitely telling us that it's attempting to form a top out here. But price is also held, as you can see here, Duff. It's held that green oscillator and change line. Momentum is still strong to the upside. So its overall message right now is neutral. Were you looking to take a short position in this? If we look at the weekly time frame, the weekly time frame does not show any kind of a topping pattern that's been confirmed as of yet. Price is above the top of that profile out there, so no reason for it to not continue to move higher. And the monthly time frame chart does not have a topping signal either. In fact, there's an A to B equals CD pattern to the upside out here on a monthly basis. I'll just simply draw, oops, I didn't mean to do that. What I meant to do was draw in the A to B line out here. That looks like this, and then we'll just simply carry that over to the C point. We're going to try to carry it over to the C point. There we go. To the C point would be like this. And so it's made the one-to-one A to B equals CD, but that doesn't mean that you sell it out here. So the monthly chart says it wants to move higher. No topping pattern that's in place. The same thing we can say for the weekly time frame. And on a daily basis, all that's really needed right now, quite frankly, is a close above the high from November 10th. And that high is 160.54 to say it's off to the races out there. Is it a short? You know, even on a 30-minute time frame chart out here, let's take a look at that for you, Duff. 30-minute time frame is bullish right now. It suggests that it wants to rally and try to target the 161.64 level out there. There's resistance, though, right here at about the price point of 160.54. So-called 160.54 to 161.64 is where you could find some selling take place out there. But is it a short? Not that Stevie is seen on these charts right here. So I hope that helps you out, at least with regard to what buyers and sellers on the chart patterns are communicating to us. Let's go to our next request out here. The next request coming in from John Camp, inside our Tiger's Den. And John must be a camper out there, one way or another. And he wants to take a look at the U.S. dollar index. He's thinking of going long the U.S. dollar index. So if we look at the monthly time frame chart out here, John, we can see that there's no top that has formed. But what price did, and it did it earlier today, was it pulled back very close to its oscillator and change line. The current reading on that monthly oscillator and change line, 104.98. The actual low so far that we've seen is 105.15. That's really pretty close out there. So that could give you a signal. That can be support. All right. So that could be support. Let's go down another time frame. Let's go to the weekly. Well, the weekly has a confirmed Rhodes momentum indicator top. And what price did earlier today was it pulled back and it tested and so far has rejected. It's a weekly chart. It's only Tuesday, but it has rejected the TD9 count breakout level of 105.43. So those two charts would give you reason, John, to consider going ahead and executing that long position inside the U.S. dollar. But wait, we've got more. What's the daily time frame tell us? Well, the daily time frame tells us that, one, there's an A to B equals CD to the downside. You can see the prices made it beyond the 1-to-1 level. We know we're at the 1 to 1.272 area. And if you were to get a bullish reversal candle today, that's what you'd really want to be, that's what you'd love to see out here, then that would generate a Gartley buy pattern. It's not a bullish hammer candle just yet, but it could be at day's end. The other thing you have going for you, now this would be, you've got a bar number 8 that is going to complete today. There's no question about that. The question is, will bar number 9 complete tomorrow? In order for that to take place, bar number 9 tomorrow must close, the U.S. dollar index must close below 107.75. Bar 8s, confirmed bar 8s, which is what we would have out here today, I believe it is 90% of the time they go on to form a bar number 9. It doesn't tell us if bar number 9 is a lower low or a higher low. But if we do get this confirmed TD9 count pattern today, meaning bar 8 has made the low of the pattern out there, you've got a 90% chance that it's going to form a TD9 count bottom between today and Thursday out there. But my preference right now here would be to get that bullish reversal candle. Then you've got the monthly that pulled back to support, the weekly that's done the same, the daily that's got a Gartley buy pattern, and then I'd say you're off to the races out there. But of course, those races say you still use a stop, a protective stop, because anything can go against us. So that's what the charts here for the U.S. dollar index are telling us. Now, when price hits support levels out there, what we look for is to see if there's some other bottoming signals on the intra-period time charts. The 60-minute has a confirmed Rhodes momentum indicator bottom. Price is dealing with resistance at 106.32. If price can clear that level, John, price should be able to make a run to 106.85. A close above 106.85 says you've got, or should have, action to the upside. A 240-minute time frame chart is trying to confirm a Rhodes momentum indicator bottom. The candle completes here at noon. So in the next 11 minutes, you might have a 240-minute confirmed bottoming signal out there. The 5-hour time frame chart, no, we don't get that there. So we are seeing some bottoming signals inside the intraday charts. And what you're really looking for here is you're looking for that daily to confirm, I think. So, John, I hope that helps you out with regard to the UUP, which is basically taking at the U.S. dollar index. So right now, folks, we're about to go to our last breakout here. You've got the Dow up 227, the S&P's up 59, the NDX 100 is up 288. And we will be back in just a few to finish out the show.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Sorry, I'm having a little technical difficulty out here, Al. I didn't hear any music. Just want to make sure you know that. We do have a caller on the line in case you need to make an adjustment there. It's Helen in Largo, Florida, who wants to take a look at Hecla. Helen, thanks for calling. Thanks for holding. How are you today?
I'm good. Thank you.
Excellent. So tell me what you're doing with Hecla. Ticker symbol there is HL, and how I can best help you.
Yeah, well, I'm kind of in and out of it, trying to make a little bit of money on it, and was looking to see if you see like a retracement on this.
Okay, are you in it now, or you're looking to buy a retracement?
No, I'm looking to buy.
Okay, perfect. So let's do this here, Helen. We're going to switch over. We're on my white background charts. And what you should notice here, if you can watch this on Tiger TV or inside the Tiger's Den, is today should become bar number 8 of a TD9 count. That says that we could get a TD9 count top that completes between today and Thursday. You still need to get tomorrow's bar to complete. If we get bar number 9, and what would be required there is price tomorrow must close above $4.99. So if that unfolds tomorrow, Helen, that would generate a TD9 count topping signal, and that would suggest price pulling back to the top of its daily profile, which is currently printed at $4.94. The weekly chart on Friday could form bar number 8 of a TD9 count. Now that would say, bar number 9 still has to complete, that would say there could be a TD9 count top that is formed between this week and 2 weeks from now. When I take a look at the monthly time frame chart, I don't have any bottoming signal, no topping signal. I have price back inside its profile. I do have price at a resistance level, but I'd really be watching the daily time frame out there. And so you're looking, I gave you the price point to look at for tomorrow out there. Why don't we take a look at this again? If you give me a call, perhaps on Friday. Now, Friday I might be recording the show between 8 and 9. But Friday or Monday, if you'd like, or you can call any time that you want, quite frankly. But it does look like Hecla may be setting up to do a retracement, and that first retracement area would be at about the 494 level. Does that help you?
Yeah, sure does, Steve. I appreciate that. Thank you.
You're welcome. Thanks so much for calling and helping us end the show. That was Helen in Largo, Florida. Folks, stay tuned. You've got great programming lined up for you for the rest of the day, and I'll be back with you tomorrow on Wonderful Wednesday. Please have a terrific Tuesday. Thanks again for joining us. Look forward to seeing you soon.